bear call spread series tutorial. This is what we're doing today. This screener, credit short call spread screener from Market Chameleon with a bearish market outlook. We're gonna go over the filters and see what we can see, and basically give you another tool of the trade, another strategy to use at your disposal. And keep in mind that you can do this strategy, collect income, collect credit while the market goes down, assuming again you have a bearish market outlook. So before we get started with all of this, let's go over a quick disclaimer, read all about it, and note that this is not a financial advice. I'm not a financial advisor. This is for entertainment, educational purposes only. And also, my name is Ziv, also known as Finance After 40. So let's get started. First of all, in order to even get to this screener, you're gonna go to here to screeners, and you're gonna pick the third one right here, bear call spread. And know that on my channel the last 2 weeks I've done a couple of videos on this one, put credit spread, one of my top favorite option strategy to sell options for income. This one bull put credit spread. We also done a couple of this debit spread, and now we're doing bear call spread, so feel free to watch the other videos. Now, in order to see what we see, I don't want all those results. I don't want 1,400 results. I want something simple. So I'm gonna go over Market Chameleon presets. Those are filters that Market Chameleon already found for us. I'm gonna click. And the last video we've done this one, best by upside cushion plus 10% edge. So let's do something else. Recently viewed, it's more subjective. Now we got this one, which is quite interesting. Market laggers plus edge. Market laggers means, I don't know, S&P 500 up 20% and the stock, whatever stock, is down 20%. That's basically it. Lags behind the market. Plus edge means that you are getting paid more than what you should have got paid based on history. So between those choices, market lagger plus edge, I'll choose this, because again, remember, you are selling options for income, and the higher the edge, the more income you are collecting based on what you should have collected based on history. So we're gonna click here and see the filters. We got ourselves expiration the next 30 days. The strike, the spread is up to $5. All those are the same, no filters. And here, theoretical edge, we got ourselves any positive. That's good. Theoretical win rate above 70%. That's what we need. And show best by ratio. Let's see what we got. Best theoretical edge by symbol. So if we click, we go down, you see only one page, and I'm trying to be like safe, as much as safe can be, and go focus on high market cap. So if we go and focus on high market cap, we got Mark, CVS, you see here, it's filtered by market cap only. But look, the beauty of this, we just went down from 1,400 pages to only one. Now I can do two things. I can filter by theoretical edge, meaning the higher the edge, the more income I get, or I can filter by win rate. The higher the win rate, the lower the return, and vice versa. So I like to start with theoretical edge, so click on this twice. Now this one, Lululemon, 28% theoretical edge, and let's see what we got. Now again, remember, you have a bearish outlook. Market Chameleon doesn't tell you if the stock will go up or down. Just found you trade opportunities based on filters and what you assume. So if you have a bearish outlook on Lululemon, for example, price today 247, you got 28% edge, okay, and 73.7% win rate. Now the trade itself is basically sell the 245 call and buy the 250 calls. Now we are at 247, so you assume that Lululemon will go down below 245. That's basically it. Now the edge, that's the beauty of here. you are collecting $210 premium compared to $127 premium, almost like $80 more compared to what you should have collected based on history. And your max loss is if Lululemon goes above 250. Again, this is a bearish outlook. Let's find something that's already out of the money, and in order to do so, if you want to be safe, you go by a high win rate, but then the edge is lower. And you see this 99%, 99. Let's check this one. AMD 143 right now, 223 billion market cap. And the trade itself, look at this, 143. You sell the 175. That is insane. You sell the 175 call, okay, and you buy the 180 call, and basically you collect $13 compared to zero because this option is worthless. Imagine AMD going from 143 to your max loss, which is above 180 in the next, I don't know, 3 weeks by October 1st. Highly unlikely. It's like 30% move. Highly unlikely. It's possible, but it's highly unlikely. You got this upside cushion, which is insane. Yeah, but but there's no edge. But it's fine. You still collect income. It's up to you. Up to you. Let's see what else we got. And now I want to check the other 99%. MU price $87, and it tells you to sell the 102. And call and buy the 106. However, we got earnings coming up, so it's up to you, but still 99% chance that MU will be below 102, and then you collect the entire amount of income, which is $35 compared to literally zero is what you should have collected based on history. If we go on a little more, CRM 246, let's see what we got here. 246, and it tells you to sell the 265 and buy the 270 for September 27. There's no earnings, there's no dividend. You see, there's nothing here, which is insane. 4% edge, but look at this. You collect $21 compared to 002, compared to $2. You're collecting 21 compared to $2, which is unbelievable. Yes, it's not a lot, it's only $20, but if you do 10 of those, and you do that every single day, and you fund those trades, you know, it's a probability game. As Tasty Trade, I watch a lot of Tasty Trade lately, and they say trade often, but trade small. So have the odds in your favor. So if you do one trade, for example, for 96% win rate, and that trade loses, and then you say option is not good, selling option is not good. No, but that's one option. But if they say trade small but trade often, so if you do this trade 100 times, 96 times on average will be a winner. That's basically it. So you win 96 times, you lose 4. Of course, it's all random, but you get my point. Trade small but trade often when you sell option. This is the message that Tasty Trade trying to convince. But this is not a Tasty Trade video. This is a Market Chameleon video, and that's what I got. And if you go by upside cushion, for example, that means how much the stock can still go up and you can still be profitable. So we did the AMD, we did the MU, we got Intel at 19. And then you sell the 21, you buy the 23. I don't want to mess with Intel because it was $30 like a few days ago. Boeing, let's see here, 160. I want to see something with expiration. You know what? I just want to play around. Expiration, the closest is in 10 days, September 20. Let's see here. The AMD we talked about. No, this is a different AMD. Look at this. AMD, interesting, 79.2% win rate. Not a lot of edge. You're collecting $58 compared to 53. Okay, better than nothing. The stock is at 143, and basically you sell the 150 and you buy the 150 and a half, and you're bearish that AMD will be below 150 in the next 10 days. So AMD can go down to, I don't know, doesn't matter, 140, 130, doesn't matter. They can go down, you win. They can stay 143, win, and they can go up all the way to 150, which is 5.3% from here. It's like 150 plus your credit to just break even. And if the stock doesn't move, you made 30.2% return on your money, which is pretty awesome in 10 days. If you think me, if you do Excel and multiply that in I don't know, 36 times, yeah, that's like 1,000% annually. But it's all up in the air, as they say. But again, when you trade small amount and play around with Market Chameleon. You got 7 days free trial, link in the description. Let's see, CVS 57, you sell the 58, you buy the 60. Again, up to you. I like the AMD a little better. Below 150 is a good number. I might consider this for myself tomorrow. We'll see after the inflation numbers. Disney for 88, 20% edge. This is interesting. It tells you to sell the 88 by the 91, so you assume that Disney will go down. Again, you are bearish on the stock, but in here you collect 118 bucks compared to 80 bucks based on history. I'll probably do the AMD, not a financial advice. This was valuable. Link below for Market Chameleon 7 days. I'll see you next time. Yeah.